The stock market has so many different ways for us to make money. We can make money by buying growth stocks, holding on to them. We can make money trading growth stocks. We can make money through options, whether we buy options or we're selling options to get some extra cash on our current positions. The stock market gives us many different choices, but when it comes to making money on the stock market, the best way to do that is to grow your income. When you grow your income, you increase the amount you can contribute to your portfolio each month. And even if you're able to get a 100% return in the next year on your stocks, for a lot of people, it's better to focus on income. Because let's say you have a $1,000 portfolio that grows 100%, it becomes a $2,000 portfolio. Let's say you have a $10,000 portfolio that only grows by 5%. We're talking about $10,500 portfolio, which even though the growth rate isn't as good, it's more than what the other portfolio is. A lot of people, they think about lowering expenses as well. This is really great when you first start with lowering expenses because you will spot a lot of opportunities to save income. Some people save hundreds of dollars per year by tracking their expenses on a spreadsheet and really thinking about what they need versus what they don't need. But the problem with continuously trimming expenses is you eventually get to a point where it's going to be really hard to continue to trim expenses. And instead of at that point trimming expenses, because that's great to do when you're first starting out, but then you're not getting as much of a marginal return for all the efforts you're looking at to lower expenses, then it comes to growing your income. And there are a lot of different ways you could do that, ranging from leveling up in your career to pursuing a side hustle to starting a business. But growing your income is the best way to grow your portfolio because it gives you more money to play with. And it also gives you the certainty where if your income exceeds expenses, you don't feel as desperate to pull money from your funds in order to pay off certain expenses. So I think that is where the focus needs to be for people who want to have the bigger portfolios. It's not just a matter of what your return is. It's a matter of how much money you have sitting in your portfolio and how much you can put into it each month. I think every investor should set minimum goals for how much they want to contribute to their portfolio and strive to raise that goal within the next few months. Some people can raise it by a few hundred, other people can raise it by $50 or less. But the idea is that you have continuous forward movement when it comes to your income, which in turn allows you to contribute more to your portfolio. Some people feel very comfortable with where they are, and that is completely fine, but you don't want to do something super risky to your portfolio where it can work out majestically and give you something like a 10x return, or you can lose all of your money. And even then, a lot of people who they get beginner's luck with something like buying options, then what happens is some people continue to go on that ride where you turn 50,000 into a million and then it turns back to zero. Stuff like that happens with people who trade enough options. And options, they do have a place in a lot of portfolios, but you don't want to rely on hitting that speculative home run to achieve the goals that you're looking for. Instead, what you should do is focus on income growth. Income is the one metric of the stock market that you can control. You can't control prices, you can't control current events, but you can control your income. That is the thing you have the most control over, and you can find great opportunities to expand on that number. So let me know what you guys think about the stock market stuff that's going on because there is a lot of opportunity, but making more income, lowering expenses, that is the best way to put yourself in a position to capitalize on many opportunities and feel like you don't have to take as many risks since the numbers are starting to line up. I know increased income, lower expenses is like the simplest of advice, but sometimes it is the foundational advice that makes the biggest impact on your portfolio. Let me know your thoughts. I'd love to hear from you guys, and I'll see you all next time.